Welcome back to Investing Talk Podcast.
Today we're looking at Medicinova, MNOV. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, definitely leave it in the comments below.
So let's get into the analysis.
Yeah.
When you look at Medicinova, you are diving into a classic asymmetric risk-reward scenario, really a high-stakes biotech play.
Right.
Where the potential returns could just dwarf the current stock price.
Right.
But, to understand why, we kind of have to start with the fundamental paradox of this company.
Which is that classic biotech trade-off, right? High risk versus potentially massive reward.
Exactly. Medicinova is a clinical stage company. So if you look at the financials, they look pretty much exactly as you'd expect for a business that isn't selling a commercial product yet.
Okay.
We're talking extremely limited revenue, only about, $134,000 for the trailing 12 months.
Right.
And high operating losses. Net income is negative, around negative $11.81 million TTM, and projections for 2025 non-GAAP EPS are still deep in the negative at negative $0.35.
Okay, let's unpack this immediately because that negative $11.8 million net income, that's a cash burn rate. I mean, if they're losing that much capital per year, how long is their runway? How long can they keep the lights on? That's usually the #1 red flag that sends investors running for the hills.
Right, and that's where the balance sheet becomes genuinely fascinating, actually. It's why MNOV is structurally maybe safer than many of its peers.
How so?
They're sitting on a very healthy cash position, about $34.2 million as of Q2 2025. But here's the critical difference. They have no long-term debt. Zero.
Wow. Okay. That is critical. Zero debt. So every dollar they burn is going towards R&D, not just servicing credit lines or interest payments.
Precisely.
But let's circle back to that, the $34 million cash versus the $11.8 million annual burn rate. I mean, doing the quick math, that gives them conservatively, nearly a 3-year runway.
Yeah, exactly. And that estimate is sort of validated by their liquidity. Their current ratio, current assets divided by current liabilities, it's 13.3.
13.3, that's huge.
It is. For context, a current ratio of 2.0 is considered excellent. So 13.3 is exceptional liquidity. It really mitigates that immediate financing risk that just crushes most early-stage biotechs. And they further solidified this position back in October 2025. They secured a $30 million standby equity purchase agreement.
Okay.
Which ensures they have flexible access to capital if needed, without immediate dilution pressure right now.
So the foundation is surprisingly solid then for a company with negative earnings. They've essentially bought themselves time, a lot of time actually. But the investment thesis can't just rest on a good balance sheet alone, right? What are they actually developing? What's the potential home run here that justifies these massive upside projections we hear about?
Well, their core strength is leadership in central nervous system, CNS, and metabolic orphan drug development. They're focusing intensely on these high unmet need markets. And importantly, they're not a one-trick pony. They have 2 major assets in play.
Okay, let's start with the one that's been in the news maybe for a bit longer.
Right. Key asset number 1 is MN166, or Ibutylast. This is already in late-stage development phase 2B3 for serious neuroinflammatory indications. Think things like multiple sclerosis, MS, and amyotrophic lateral sclerosis, which most people know as ALS or Lou Gehrig's disease.
And ALS in particular, I mean, that's a devastating, currently untreatable disease space.
Absolutely. Regulatory success there, I mean, that's instant blockbuster territory because the patient need is just so desperate.
Yeah, no kidding. That alone would be worth far more than the current market cap if they can actually execute and get it approved. But you mentioned a second asset, MN001.
Exactly. The multi-indication potential of their proprietary compounds, MN001 and MN002, is what's really significantly expanded their addressable market recently. We've seen publications confirming promising results related to cardiovascular disease, type 2 diabetes, and non-alcoholic fatty liver disease, or NAFLD.
Okay, let's pause on NAFLD for just a second, because this is often that sort of silent precursor to serious liver disease, and its prevalence is just spiking globally because of metabolic health issues, obesity, diabetes.
It's massive. It's a huge potential market.
Yeah.
What's fascinating here is that the pipeline diversity for MN001-002, it complements the neurofocus of MN166.
So they're not competing for resources internally.
Exactly. It means they are not cannibalizing their own research budget. They seem to be efficiently addressing 2 completely separate, highly lucrative disease clusters. It's kind of like having 2 different companies under one extremely clean balance sheet.
Okay, here's where it gets really interesting then. Because the market seems to be reacting to this dual track strategy, doesn't it? I mean, looking at the chart, the technical analysis shows a stock that is incredibly volatile, but maybe that volatility is purely event-driven.
That's exactly right. The technical momentum is almost entirely based on clinical news. When the data is positive, the stock just moves parabolically.
Yeah.
We saw strong bullish spikes just recently. The stock surged over 26% on November 2nd, 2025, right after a publication of positive clinical data.
Wow.
And just before that, it jumped an astonishing 85% after hours on October 31st, following some compelling preclinical results.
85% after hours. So, okay, investors are clearly trading the science here, not the Fed rate or the broader market mood.
Seems that way.
Given that, what are the key technical levels that, a listener should be watching if they want to maybe get in or just track a potential breakout?
Well, we've established some pretty clear short-term boundaries. Key resistance seems to be sitting between $1.60 and $1.85. A confirmed technical breakout above that level ideally needs to be sustained over a few sessions.
Right.
That could target the $2.50 very quickly. On the downside, critical support looks like $1.45 to $1.50. You really want to see the $1.50 level hold on any market fluctuation or pullback.
Wait, I was just looking at the technicals while you were talking, and the stock's beta is only 0.35. For a stock that can move 26% or even 85% on news, that low correlation to the broader market, it seems kind of counterintuitive, doesn't it? What does that tell us about who's investing here?
Yeah, it's low. And it confirms exactly what we were just saying.
Yeah.
The money flowing into MNOV appears to be specifically event-driven, not systemic market money. That's likely clinical news traders, focused biotech sector funds, not broad index trackers. They're buying the breakthrough potential, which insulates the stocks somewhat from general market turbulence, up or down.
Okay. So if we connect this to the bigger picture, then the external sentiment, the analysts, the traders, it must be overwhelmingly bullish to support that kind of event-driven action, right? What are the analysts saying?
The sentiment is indeed overwhelmingly bullish, and this is perhaps one of the most compelling parts of the investment thesis right now. Both covering analysts currently rate MNOV a strong buy.
Strong buy is great, but let's talk numbers. Let's talk about the math behind that rating. If the stock is currently trading, under $2, what kind of price targets are we looking at?
Okay, so the average 12-month target currently sits at $7.
$7 from under 2.
Yeah. Now, obviously, that number suggests an incredible plus 418% upside potential from current levels. This isn't just, random hype. It reflects the high conviction analysts seem to assign to a breakthrough success in either MN166 or MN001. Maybe both.
418% upside is, well, it's massive, but that only happens if one or ideally both of those drugs actually succeed in the clinic and get approved. What are the core assumptions driving that $7 figure? What has to go right?
Analysts are likely modeling for success in two primary areas. For MN166, the projection is probably based on successful phase 3 trials in a high-impact neurodegenerative disease like ALS.
Okay.
Where peak annual sales could easily exceed, say, $500 million, given the terrible unmet need there.
Right. Huge potential.
And for MN001, the assumption is likely the potential for accelerated FDA designation, fast-track approval for one of the high-prevalence metabolic diseases like NAFLD. Capturing even a small slice of that vast NAFL market could immediately justify a valuation several multiples higher than where it is today. It's essentially a bet on clinical execution leading to relatively quick market access.
And that conviction, that bullishness, is probably reflected in the options market too, isn't it?
Absolutely. Options traders are showing really pronounced bullish sentiment. The put-call ratio is sitting at a very, very low 0.02.
0.02.
Yeah. That means for every 50 options being traded, only one is a put. A bet that the stock will fall. That's almost unheard of for a company that's still burning cash.
Wow.
And retail sentiment is also, anecdotally notably positive across financial forums. Suggests a lot of eyes are watching this one, waiting for the next catalyst.
Okay, so the technical levels look primed. The balance sheet is surprisingly secure, 0 debt. The potential reward is obviously huge. What are the key near-term events? What could trigger that huge move towards the $7 target? What are the catalysts coming up in the next, say, 0 to 3 months?
Well, the next 3 months look packed, actually, mainly with pipeline execution milestones. First, you've got the Q3 2025 earnings report coming up on November 14th.
Okay, but earnings themselves won't matter much, right? It's about the commentary.
Exactly. It won't be about the top-line revenue. What people will watch for is management commentary on R&D guidance, cash burn projections, and maybe how they plan to utilize that $30 million equity agreement without causing excessive dilution.
Got it. And the science updates, the actual trial data.
That's the big one. We are anticipating data readouts from multiple phase 2 trials covering the metabolic side. So hypertriglyceridemia, type 2 diabetes, and that NAFLD program. Positive results here would instantly validate the whole multi-indication thesis for MN0001-002.
And de-risk the asset significantly.
Massively de-risk it, yeah. We're also waiting on potential announcements regarding advancement to phase 3 in their core CNS programs, particularly ALS. Getting to phase 3 would be that final major stage gate before they start thinking about commercialization attempts.
And we shouldn't ignore the speculative buzz either, right? Around MNOV.
No, definitely not. Market chatter is indeed very active. There are rumors circulating about strategic partnership possibilities or even acquisition interest from major pharmaceutical companies.
Targeting which asset?
Could be either, honestly. Targeting MN166 for its neuro capabilities, or perhaps MN001 now because of the recently demonstrated scale of its metabolic potential in those big markets like NAFLD. You know, anytime a clinical stage biotech posts exceptional data, acquisition whispers tend to follow pretty quickly. There are also those rumors about potential accelerated FDA designation, that fast-track pathway for MN001.
Okay, this all sounds incredibly promising, but it raises the critical counter-question. We know the upside is massive, potentially 400% plus, but for a high-risk, event-driven stock like this, what are the unavoidable risks? What do people need to be aware of before jumping in?
Right, you have to look at the downside. The two biggest risks are pretty inherent to this sector, biotech generally. But because MNOV is so dependent on specific events right now, the risk is amplified. Number one is clinical trial risk.
The big one.
The big one. This is really a binary stock in many ways. Negative trial outcomes or regulatory setbacks like a no-go from the FDA on a K indication that would almost immediately drive catastrophic downside. It would likely wipe out much of the current momentum and valuation.
So the price target might be $7, but the floor could be much, much lower if the data fails.
Precisely. That's the gamble. The second risk is funding risk. Now, while their current balance sheet is stellar, like we discussed, zero debt, good cash, if all the upcoming trials require prolonged, expensive phase 3 investment, and maybe the capital markets tighten up, then sustained operating losses mean long-term funding needs could still lead to shareholder dilution down the road. They've managed this risk incredibly well for now, but it never completely disappears for a pre-commercial company.
Okay. So wrapping this up, what does this all mean for you, the listener, who might be deciding whether to buy now? It really does seem like a classic asymmetric risk-reward scenario. The downside is potentially limited to your invested capital, but the upside, well, it's potentially life-changing if things go right.
I think that sums it up well. Medicinova offers an incredibly attractive profile because of its strong financial position, especially that zero long-term debt, and its diverse late-stage pipeline addressing major unmet medical needs. It seems best suited for two types of investors, really.
Okay.
First, maybe the short-term speculative investor, someone focused solely on the imminent data readouts and maybe partnership news over the next, say, 3 months.
Trading the catalyst.
Right. And second, the patient long-term investor, someone seeking exposure to potentially high-impact, innovative biotech who is willing to accept the high volatility that comes with clinical execution, all in the pursuit of those potentially massive long-term returns.
Yeah, our analysis definitely shows the technical levels look primed, sentiment is clearly ready for a breakout if those catalysts hit positive notes. But it always comes back to this in biotech. Execution is absolutely everything. So the final provocative thought for you today is this. Given the exciting new data suggesting MN001's massive potential in common diseases like cardiovascular health and NAFLD, alongside MN166's focus on devastating orphan diseases like ALS, which indication do you think will ultimately be the primary driver? Which one gets the company's valuation moving towards that ambitious $7 target first? The high prevalence metabolic markets or the high impact neurodegenerative ones? Something to think about.